Hi everybody, it's Marc Champ here from Wharf Financial. Thank you for tuning into the Wharf Academy. Today I'm here with Abby Challen from LendInvest. Hi Abby, how are you?
I'm good, thank you. Thank you very much for having us.
No problem at all, no problem at all. So Abby and I work together on lots of transactions. Abby's at LendInvest. And Abby, why don't you tell us a bit about your background, what you've been doing?
Yeah, so I've been in BDM for, well, all of my life really, and I hate to say it, but I kind of fell into finance, and I started off around about 7-8 years ago working for a packager, which was really insightful because it gave me an understanding of, the flexibility some lenders have, the USPs that other lenders have, and a really good grounding as to kind of what type of businesses around there. I specialise basically in second charges, buy-to-lets, portfolios, bridging, regulated deals, unregulated deals for bridging, semi-commercial and commercial. So I had a really, really good start. And then, Lendingvest basically approached me and they were on my radar. They were one of our lenders and they had some fantastic USPs, which I will talk to you about in a minute. And I interviewed and I've been with them ever since. So I think it's coming up to about 3 years now.
Excellent. Well, LendInvest are a lender that I know pretty well, but the people listening in may not know too much about LendInvest. So what are LendInvest strengths? What are the things that they do better than anybody else?
Yeah, it's hard to summarise because there is obviously sounding a bit biased here, but there are a lot of strengths. They are a lender that have actually gone from strength to strength and broadened their product range. One of their biggest USPs is the fact that they're not affected by the PRA rules, which was what drew me to them. They've started out in 2008. They started out as bridging finance predominantly, and that bridging finance is still very much the heart of what we do. They used to be called Montello, and then in 2013 they rebranded, and that's where LendInvest came from. And we basically are a lender that really, really integrates technology. So we are a fintech lender to make everyone's life very kind of seamless and easy and take the paper out of the process. Brokers and clients in turn love that about us. And we have a variety of products which watch the space, they're growing. And every single one of these products really supports one another. So for instance, you've got your bridging that can go into a development or a dev exit. You've got your bridging that can go into buy-to-lets. You've got your bridge-to-lets. You've got your HMOs, your multi-unit freehold blocks, and quite regularly, I would say, our bread and butter clients are your investors, and we get a lot of portfolio landlords come to us. The feedback that I get, and I happen to agree with, is the fact that we really do understand our clients, and we make their life easy. We understand things such as limited companies, intercompany loans, incorporations, LLPs, and we actually get a lot of repeat business because of that.
Yeah, and I can wholeheartedly endorse LendInvest from a service perspective and also your range of products. The thing that actually impressed me most about LendInvest, first and foremost, was, like you said, the ability to understand the client's situation. And one of the things that they were the best at, in my opinion, was when there was a title split and understanding the process of where a freehold is split into several leaseholds. That can flummox a lot of lenders and solicitors. And you understand that, and your underwriters are aware of that scenario and make it easy for the customer. And I know, I know Jean, who is your head of credit. She obviously understands the market very well as well. And I think another thing to notice is there's a lot of women in LendInvest, it seems, whereas a lot of the organisations I've worked for in the past were very male orientated and dominated. Is that done on purpose, or is that just a happy coincidence?
I think really when I first started in the finance industry, I can't say it went without noticing that it was a very, very male dominated industry. So if you didn't know football in the schools, then you didn't really stand a chance. No, I'm joking. It was definitely male dominated. And I think the market has changed. It is growing more towards an even split, and I do really believe that Lendingvest are leading that, and they understand that men are equally as good as women and vice versa, and they're understanding that actually that flexibility around people's working life and working life balance, and they really do offer that support. So there is a lot of us women, and it's a really nice environment to work in, and obviously that goes without saying, we do also have a lot of men in the industry as well. We're not completely going the opposite way to try and cater for the lack of women out there.
No, it is good, and we deal with everybody, and it's just great to see that Lendinvest are championing that. It is really good to see. So moving forward onto the product side of Lendinvest, you've mentioned the strengths, but what can customers do to get themselves in a really good position to borrow from Lendinvest?
Yeah, well, I think to borrow from Lendingvest, I mean, we do cater for first-time landlords as well as experienced landlords. I think one of the biggest things that I often see is, sadly, we have very, very strong cases in terms of experience and income, but they might have just missed a payment or a mortgage payment, and it can just be ad hoc. I would just say really keep an eye on that, because it can be so detrimental, and I think that unfortunately pushes people sometimes into tier 2 category, when actually it's just maybe a one-off blip. There are times where we can consider it, depending on how bad it is, but generally I'd say the biggest thing that stops business is the fact that it's the credit. And the other thing is, obviously, the market is really, really increasing from where I'm standing for, the likes of like HMOs and multi-unit freehold blocks. I think a lot of landlords and clients are realising that they can yield a lot better than your average buy-to-let. You're looking at maybe 15% yield rather than your average 3 to 4 to 5% on a buy-to-let. So with that, for our HMOs, we do need to have experience there, because owning a HMO is very different from owning just a buy-to-let. So if people are wanting to grow their portfolio and most certainly grow the yield that they're getting, I would say actually to start off with experience of having those buy-to-let. So just to kind of pitch where we stand for HMOs up to 6 bedrooms, which is our smaller HMO category, you do need to have 2 buy-to-lets, one held for 12 months. And then we also cater for HMOs all the way up to 15%. The reason we do that is because we realise actually that a lot of our clients do like the yields they're getting off of them, and they're going bigger. And we do need to see that they have actually dealt with a larger asset, such as a HMO. So experience is key for probably your more experienced landlord. But if you've got someone starting out, I would say definitely focus on your credit and don't let anything slip there, because it sadly can be very detrimental.
Yeah, I think that's sound advice. And I did a Instagram post yesterday, and I was talking about my top tips for property finance, and understanding the market and the location, all that sort of stuff needs to be done. But one of the things that I did say was don't borrow too much. And Lendinvest, you offer an 80% product. That's pretty punchy. And for me personally, I would never borrow at 80% loan to value, just because of my risk appetite. You guys price your 80% high in comparison to your 75%. But what would you recommend for customers? Would you say borrow the maximum, or would you say, how would you look at it?
I think, to be honest with you, it's one of those, there isn't an answer for everybody. It all depends on what someone wants to do. So often I will be very kind of supportive of the brokers and talk about the cases that they've got, without obviously giving advice, because you guys are ultimately the ones giving advice to the client. But if they've got a property that they do feel is in a good area for growth, then a lot of clients do want to do maybe such a 2-year fix and go to 75% loan to value, because they do feel that actually they can refinance and release capital, and there is going to be growth there. If you are a little bit nervous about the area you're you're borrowing in, and you're looking for something a little bit more stable, then I think 75% is very safe. 80% is, like you say, punchy, but we do have our stress tests at 1, 2, 5 at 5 for that, to make sure that the rent actually is capable of going to 80% loan to value, and so we do take that into account. But like you rightly said, the rate does shoot up, and I would absolutely say that 75% I personally think is a very popular and safe option, but I do think it all depends on the plans of the individual, to whether they want to have something that's kind of put away on a very good interest rate, and they're not trying to grow it, or whether they think that the market's strong with where they've invested. But hopefully, my advice to anyone is to do your research within the market and really understand the market, and is it likely to grow? Has it grown? Are you buying at the top of the market? Are you buying at the bottom of the market? And obviously take that into consideration when you're thinking about the loan to value.
Yeah, I think that's sound advice. I think it is very important to know the full circumstances before approaching any investment, because obviously investments can go up or down. And my personal view is that you should always be prudent when going into any investment. Don't overcommit. So talking about overcommitting and markets are moving up and down, where do you see the property finance market going in the next, say, 12 months?
Yeah, it's a really interesting question, and I guess no one has the crystal ball to tell you whether it's going to go up or down. I'm a massive lover and believer in property prices going up, and I do think it's a really good investment, because it's an investment where, say for instance, you didn't have growth or you did have a slight drop, it's something where you could add value. So you can always do splits on titles, or you can do an extension. So I always think that there is an option of adding value to property, and we do see that all the time. A lot of people do add value to property, and they go out and actually actively find property where they can add value, and one of the reasons why they do that, particularly with Lendingvest, is because we do have the bridging finance that can obviously pop the loan on something that maybe isn't habitable or not in good condition. It gives them kind of breathing space to add that value, and we can do the day one remortgage and go off the uplift in value. So on that note, I think the market stays strong with COVID. I think also London is a very, very safe haven. If it isn't growing, it might not be growing 5-6% per annum, but it probably will be growing 3 or 4%. So I think the worst case scenario, depending on the location you're at, has I think I lost you there.
Yeah, we're back. I think we're back. We're back. Yes.
So did we get all of that, or
we got most of it, and it was all really good. So thank you for that. But what just before we wrap up, one thing I should mention about Lendinvest is your long-term fixed rates, which are very popular, and a lot of our contacts ask about those. So you do a 7-year and a 10-year now, is that right?
So we launched into a 7-year product. I have to admit, I was a bit kind of I questioned whether that would be popular or not, and the verdict was out. It has been incredibly popular, so much so that we've actually launched a 10-year product now. I think the popularity has come from 2 pools of people. One of them is your big time, portfolio landlord that might have, anywhere from about 20 to 500 properties. We do see large portfolios, and they do not want to be revisiting those properties and refinancing them every 2 or 5 years. They're quite happy to put it away for 7 years and know exactly what's going on with those properties. And you've also got your clients that are maybe kind of, that they're more tuned into the risk of the world. I think obviously with Ukraine situation going on and mortgage, rates going up, a lot of people want to have a bit more of a safe bet. They know exactly what's going to be coming in. They want to know what's going out. And because the 7-year product was so popular, we have then launched the 10-year product. So we are a lender where you can come to us, and we've got flexibility with the ICRs, we've got flexibility with the loan to values, we've got flexibility with the products, and we do offer your 2-year product, your 5-year product, your pay rate 5-year product, your 7-year product, and your 10-year product. So it's nice to be basically a one-stop shop and give them the flexibility and the options to choose.
Yeah, and I think also the product where you can go from a bridge straight into the buy-to-let that you mentioned earlier. And I think you get, is it no legal fees on that or no valuation?
Yeah. If it's a standard buy-to-let, we can waive the legal fees and the valuation fees. If it's a HMO or a multi-unit freehold block, as much as I'd love to sit here saying that we waive the valuation fee, sadly we don't, because they can really add up. But we do waive the legal fees. So it keeps the overall costs down for the clients, and it enables them to have that nice transition as well and get the uplift.
Excellent. Well, it seems like Lendinvest really are covered across the whole market, which is great. Makes my life a lot easier. But thank you, Abby. Thank you so much for joining us. It's really appreciated. And if people want to get hold of you, how can they contact you?
Yeah, well, obviously you're definitely one of my brokers and one of my top brokers. It's a pleasure working with you, so they can come through you. If anyone does want to contact me directly, you can give me a call on my number. I'm allowed to say that on here. Yeah, so it's 07826 199 499, or my email address is abigail.challen, which is abigail.challen, and that's at lendinvest.com. We also have an internal sales desk who are always there to pick up the phone if I'm not available, in that minute, and that's for bridging and for buy-to-let. So we're all working together as a team, and we all support one another, and we welcome any cases or questions or discussions, and we're here to kind of make your life easy.
Excellent. Thank you very much. So thank you, everybody, for tuning in. Really appreciate it. If you need any more information from myself, you can get me at info@wharffinancial.co.uk or on all our social media at Wharf Financials. Thank you very much, everybody, and please like and subscribe.